Welcome to this month's portfolio update, and for those of you new to the channel, I'm Aurelius. I make videos on personal finance and investing. Today I'm going to discuss calculating dividend yield and take a look at other metrics you should take into account when evaluating a stock based on yield. Let's get stuck in. First of all, the obvious question: what is dividend yield and how do you calculate it? The formula is pretty simple. Dividend yield equals annual dividend over current share price of the stock. It is better to look at the yield on an annual basis rather than quarterly in my opinion. Let's look at an example for this. ExxonMobil, one of the largest oil companies in the world, has an annual dividend of $3.64 per share currently. Putting that over the current share price of $103.37 gives you a dividend yield of roughly 3.52%. Now this lends to a question, do I really need to calculate this? And the answer is, not really. Most trading platforms will do this for you, but it's still good to know where it comes from. I tend to aim for stocks with higher yields than about 3%. And as you can see, 3M is very attractive on this metric. One other important thing to look at when evaluating dividend yield is EPS, earnings per share, which is the monetary value per common share of stock of that company. When looking at the yield, you want to compare the two to see if the company is paying out a substantial amount of its earnings in dividends. Essentially, is the dividend sustainable? This would be a potential red flag if it was high compared to the EPS. Let's now take a look at the updates to our portfolio since last month. The value of our portfolio now stands at $5,960.11, and you can see the collection of our stocks left to right here. I want to do a bit of a health check here first. Primarily stocks I'm considering unloading and why. The first is Kroger. There are three main reasons for this in my estimation. 1. Kroger's profit margin is abysmal, currently standing at 1.51%. Any small dip in revenue or bad decisions could spell disaster for the economic viability of this company. 2. Their debt to asset percentage is also concerning, standing at 79.76%. And third, finally, the dividend yield is quite low given the size of the investment and the risk on investment, standing at 2.2%. I believe there are better investment opportunities out there at the moment. The second stock is MK4, a UK-based packaging company. We have very little invested in this with 4.4 shares to the value of $40.57. I bought this initially because it was cheap and to diversify into the UK and packaging industry. Profit margin stands at 5.53% and debt to asset percentage is 76.58%, which are my primary concerns for MK4. The single purchase this month is 4.4 shares of 3M. Bring our holding to $710. My reasoning behind this is 3M is at a good price, with it being at all-time lows of $94.31 at the moment. And despite the difficulties it is facing, i.e. the lawsuits, I don't believe it's going anywhere anytime soon. The company has a solid profit margin of 16.88%, debt to assets is in a comfortable range at 63.31%, and the yield is very attractive at 16.19%. The only concern I have for this company is the cash flow. 2 out of the last 3 years have had a negative cash flow, but this reflects the current issues within the company. Here is a rundown of our other stocks and where they stand within our portfolio. So first up is Federal Realty Investment Trust with 3.3 shares to the value of $276. Next we have the two energy companies, Chevron and Exxon. Chevron standing at 1.7 shares to the value of $170 and Exxon 2.3 shares to the value of $228. Now we move on to our three largest holdings. First off, Coca-Cola, 13.4 shares to the value of $764. And now 3M, which is one of our larger holdings after the purchase, 6.5 shares, $710. And Microsoft, 2.2 shares to the value of $679. Then we have Intel, 14.8 shares to the value of $432. Apple, 2.3 shares, $380. And Kellogg's 6.8 shares to the value of $428. Now we have T. Rowe Price, 2.5 shares to the value of $258. Altria, one of our highest yield stocks, 10.6 shares to the value of $449. And Realty Income, one of our only monthly dividend paying stocks, 6.1 shares to the value of $341. And the final three stocks in our portfolio is Kroger, 6.2 shares, $267, Walgreen Boots Alliance, also one of our larger holdings and a pretty good dividend yield, 18.2 shares to the value of $538. And MK4, one of the ones we're thinking about unloading, 4.4 shares to the value of $40.57. Our total dividend income since the conception of the portfolio is $59.14. In addition, since the last video, we received $9 in dividend payments, $1.22 from Realty Income, 43 cents from Apple, $1.46 from Intel, and $1.28 from Kroger, for a total of $4.39 this period, one of our smaller earnings, but consistently growing nonetheless. That concludes this month's update. I hope you found this video useful. If you have any questions, leave them in the comments below, and as always, thank you. Catch you in the next one.